Hey guys, Bix Weir, roadtour.com. We have our longtime friend, and we haven't seen him in a while, Andy Schectman. Andy, how are you, my friend?
Bix, I love you, buddy. Great to see you. Good to be back. Thanks for having me. I was telling you, it was weird because I was thinking so strongly about you. I mean, it's weird how you put something like that out, or maybe you were thinking of me. I don't know, but you get these immediately. There you are. It's great to see you, and I've been thinking about you. So thanks for having me.
Well, it's been, obviously the time we spent on the road together with the craziness of that gigantic, you know, U.S. Mint, Silver Eagle, Gold Eagle delivery, and all that. That was this summer was just a crazy time.
I loved it. I
But
learned a lot from you. You blew my head off on the road. Literally, just talking to you for the first time and really getting to pick your brain one on one without distractions was fantastic. So,
yeah,
yeah, I'd
it
like
was
to
a,
do it again. Anytime you're on the road, count
I
me
hear
in.
you. Hey, I hear Litecoin Lisa is trying to put together just a one-off meetup somewhere, so we'll keep you informed with that one.
Sounds
Um,
good. Love to be there.
the big news of this morning just posted is that SLV, that monster mother of a manipulation machine ETF, just the inventories just dropped below 500 million ounces for the first time since May of 2020. Um, your thoughts? Basically, what happened was May of 20. It was always like kind of going up on smooth and steady, and it hit May of 2020. And when it hit 500, it just kept going up. And then you had the silver squeeze going on the year later, and it spiked to 729 million ounces, and has since been just working away, chipping away at that inventory. And now we're back to where we were in 2020, just below. I think we're at 498 million ounces. What are your thoughts on that? Do you think there's anything significant about it, or what do you think's going on there?
Well, you know, they put so much emphasis these days on the drawdown of the LME and COMEX, and legitimately so, right? LME has less silver than at any time since they started keeping records. This is a 140-year-old exchange. You got the COMEX down to 33 million ounces. And to put that in context, India imported 300 million ounces last year of silver. So when you talk about the entire COMEX having 300 million, of which 33 of it is registered or available for delivery, it lets you know just how thin the margins or the availability of product really is. So one of the things that they've been doing, they being the banks, the authorized participants, the commercial banks and the large hedge funds that have baskets worth of silver in SLV, is what's called share redemption. And it's a very private way, a very opaque way of taking deliveries. I was reading Ed Steer this morning, and I'll quote what he says. There was another monster withdrawal from SLV, the second one in as many days, as the AP, authorized participant, removed 4,415,443 troy ounces of silver, more than 7 truckloads. That's on top of the 3.08 million ounces, or 5 truckloads that were taken out on Tuesday. In 2 days, an authorized participant took off somewhere in the neighborhood of 7.5 million ounces of silver. And I think it's very, very illuminating. In other words, price and rhetoric are the tools of misdirection that allow these authorized participants, or let's call them the people with the biggest pocketbooks closest to the information. They're draining COMEX, they're draining LME, they're draining SLV. They're finding ways to gather the real thing, while the price, the suppressed price, enables them to do so in the cover of darkness without being ratted out, without being crowded out of their trade, because all of us see the immense value in silver. And it's because of the price suppression. You know, all of the work that you've done, that Chris Marcus, that the Wall Street Silver, that the Silvers, all the people who
Ted
talk
Butler.
silver. Ted Butler, God bless Ted Butler, all the people, David Morgan, all of them, you know, we all see that, but unfortunately the suppressed price doesn't allow that to permeate out into the mainstream. And this is exactly what allows them, under the cover of price suppression, to drain 7.5 million ounces of silver, and no one talks about it. but guys like you and me and Ed Steer and Ted Butler, and you know, it is, I think, very, very telling as to the bottom line is the big money always front runs what's coming next. And you can see this is a form of front running to the nth degree, because if price was an indication of value, then why the hell would someone take this off of SLV and pull it away from wherever it's being held? And I think it's important to note that when you take this metal out of wherever it's being held, you know, this is a big deal, because at least in the case of the COMEX, it loses all liquidity from an industrial standpoint when it leaves the COMEX ecosystem. So where is this going? Who's taking it? Where are they moving it to? I don't know. It seems like everything's moving eastward. That I do believe.
I mean, when I see big moves, and obviously the big guys are playing with derivatives. We saw it with Bank of America taking out, what was it, 1.2 billion ounces worth of silver on their derivative book that the OCC conveniently decided to hide. I'm linking it with the bigger things. So the fall in the COMEX inventory, not the COMEX, but the iShares SLV inventory, we're talking 230 million ounces over the last couple of years, since basically February 2nd. So that's what, 2 years, 2 full years. February 2nd, 2021. It gets you thinking, okay, who's got 230 million ounces came out of it? If the reporting is correct. I mean, JP Morgan is the custodian of the silver, which is probably the most egregious form of manipulation by BlackRock, who owns this whole thing, decides who the trustee is, put the number one proven rigger of silver, who had to pay 920 million for rigging the gold and silver markets, put them in charge of the physical metal. I mean, and I've gone through BlackRock, the people, you know, the Hambro family is in there. It is gigantic, the silver manipulations within BlackRock. You won't see their name on the deliveries of any metal out of the COMEX or iShares, but they're you got to remember, they're knee deep in this.
I mean, it's ridiculous. It's like someone being convicted of pedophilia being allowed to be the preschool teacher. It just makes no sense whatsoever.
Well, that's very well put, and probably more apropos than any of us want to talk about. But I mean, to me, I see these big moves. I think they're all connected. I think this massive, I mean, Bank of America wouldn't just take out a lease from JP Morgan for all the silver just to suppress the price. There has to be more derivatives involved, and we saw the derivatives involved. I think the OCC is hiding those derivatives now when they put gold in with silver to obfuscate the entire project. But I think this is part of it. Is part of the back end of this was, okay, what happens at the end of this lease? They either pay back cash. I was in leasing for 25 years. You can structure these large leases. You can structure any kind of back end you want. You can structure it that, you know, they pay back 50 cents for each piece of silver. You don't even have to return any ounce. You can structure it. You have to give back the physical silver. You can structure it. You can buy it out. You can structure it. You can pay out in SLV shares. And like you said, take a basket for delivery. Now, a while ago, I was banking with JP Morgan on the Road to Ruta. I had the Road to Ruta account at JP Morgan. I figured they'd be the last ones taken down, because if they were taken down, everybody else was gone. So I'm like, all right, fine, I'll go with JP Morgan. And they kept calling me to say, hey, you know, you should invest with us. You know, their private client thing. You should invest with us. We'll tell you what to do. So I finally go in and have a meeting with him. And he's like, oh yeah, you should be buying these bonds in China and all this shit. And I'm like, tell you what, you know, I'm a precious metals guy. And the guy I was dealing with didn't know what the hell was going on. But I had heard people talk about, if you can get 50,000 ounces together and you can stand for delivery on SLV. It's part of the prospectus that you could take out one basket. And I'm like, oh, I can get a bunch of people and we could just fuck with the authorized participants, right? So I asked the guy, I said, hey, what if we do this? Can you facilitate? You guys are a market maker in silver and an authorized participant and the custodian of SLV. I would like to take buy shares and take delivery of those shares. He says, can you do that? I go, yeah, I think you can do it. Why don't you ask up the chain? 2 weeks later, they shut off all my accounts at JP Morgan, closed them down. I didn't think it would get that big. And it was just like, and I complained to them. I complained to the Fed, and nothing. They said, it's our decision, and that's the decision we made. And I'm talking to my guy. He goes, they won't tell me why.
Well, they did a little digging and figured out who you were, and
well, or I think if anybody said, hey, I want to take 50,000, or was it 50,000? I don't remember the full number. It would have been quite a bit of money. I think it was 500,000. 500,000.
Yeah, so it's probably 50,000 shares, and I think each share is 10 ounces of silver. I think
they're 1-to-1. They're 1-to-1.
They are 1-to-1 now.
So
okay.
It'd be 500,000 shares. I was going to get a bunch of people and do it, right? So anyway, on a side note, I do think that this derivative structure of this Bank of America, JP Morgan thing, because it started right when JP Morgan got busted. And Ted Butler had cataloged exactly how JP Morgan was suppressing the price of silver and then taking physical in inventory. And then they got out of their silver rig job because they're easily more agile in the derivative market than they are the physical market.
One of the questions I had, though, Bix, you and Ted have done an amazing job of talking about it, but why did Bank of America want to lease this silver for 1 year? What was the reason behind it?
Well, they were 1-year leases, no more than 1 year, because that was the OCC data. But they could probably renew for a year and a year and a year. I think the reason behind it was the facilitation of the wind down of JP Morgan's 1.2 billion ounce lease silver possession. That I think part of the agreement, it's a deferred prosecution agreement with JP Morgan, meaning they had 3 years to finish this whole agreement. I think part of that agreement was they gotta get silver back out of their inventories. They can't hold that much silver. Can you imagine if it was declared, oh my God, they have a $920 million fine, and part of their scam over the last 8 years was taking people's physical silver while suppressing the price. They can't let that information out. That would vindicate all us silver conspiracy lovers. So what they did behind the scenes, they did a structured thing where they got rid of the silver. And by the way, JP Morgan booked a $1 billion gain the same year they had to book the 920. Yeah. So what that means from a lease accounting standpoint is that they gave up ownership of that metal. Because if it was just a regular lease where the lease, they lend out the silver and they get it back, they wouldn't book any gain at all. So yeah, I think it was part of the structure. And then, what is the structure? We've got a silver deficit, first time since probably Warren Buffett, a serious one. And, that's why Warren Buffett got into silver in the early or late 90s and into the 2000s. It was the deficit. It made sense for the deficit. So who's on the back end of this lease structure? I wouldn't be surprised if it was Warren Buffett and maybe Elon Musk, who absolutely needs silver for his solar panels of his electric cars.
Yeah, it's interesting because the way I read it, Ted Butler made it sound like they sold the silver or leased it to Bank of America, who then sold it immediately, and JP Morgan bought it back immediately. And now they have the silver, and then also has Bank of America on the hook to repay the same amount of silver, allowing them to, in essence, accumulate more silver without anyone knowing. Now, maybe I misread that wrong, but that's what I've been having a hard time figuring out, is why would they put themselves on the hook like this in such a tenuous time? Seems like the craziest of things to do in terms of risk. It just seems like the dumbest thing in the world to do.
Yeah, I don't agree with Ted that JP Morgan bought it back. I do think it was a structured deal, part of the settlement, because there would be no reason for Bank of America put themselves at that kind of risk, especially.
I hope not.
No, I mean, I would say, but here's the other thing. If you look at the derivative earnings for Bank of America, JP Morgan. I think Citibank's involved as well. Both JP Morgan and Bank of America for the last year and a half have had massive earnings increases in their precious metals book on their derivative side. And JP Morgan has done well too, but Citibank has taken big hits. And I think there's a lot of banks. I did notice over the past 6 months or 8 months that a lot of the banks are buying SLV shares. They weren't really buyers of SLV. It was more like hedge funds and people on a whim are going to buy it. But now all the big banks are pretty big owners of SLV. They're in like the top 10 ownership of SLV.
Saw that also.
So I think it's more of a structured deal, that it was planned to cover up the original sin. The original sin was JP Morgan naked shorting silver for 8 years, taking all the physical silver off the market. And then, finally it was the Trump administration that came down on them when JP Morgan was trying to crash the system for Trump's reelection. That's exactly when it all happened. So I don't know. Will we ever find out what actually happened? I doubt it. But at the same time, we're seeing the ramifications of disappearing inventories.
And to me, that's the biggest thing that I keep harping on. It is the disappearing inventories off of all of the major exchanges, and in this case, off of SLV, that is betraying the price suppression. And because the value was an indication of it, who would be taking this kind of possession? And it's happening across the board, everywhere you look, and it's happening in gold too. Just the other day, on January 11th, one trader took possession of 1,223 contracts of gold worth $230 million, and then 3 days later took another 505 contracts worth $96 million. Price, whether you're talking gold or silver or whatever commodity you're talking about that has been suppressed, that price is being used specifically to misdirect the public and allowing the biggest money in the world, the money closest to the information, the money that wants to de-dollarize and have tangibles in their possession. It's very telling that this money is grabbing at a massive rate from all of the main exchanges. You can even look at aluminum and zinc. We're down like 75 and 90% respectively off the LME. And a report just came out that said China holds 20% of the entire aluminum stockpiles in the world. So they're buying as much as they can from the exchanges while they will allow them to sell it, and using paper derivatives to suppress the price. Now, I should have asked my head trader this question, because I didn't know that I'd be on here with you, but I asked him the other day what it would cost for us to buy a 100-ounce gold contract, because I wanted to explain how they suppress stuff so easily, a bank like Bank of America. And I asked him, I said, how much would it cost to buy a 100-ounce gold contract? This is when gold was 1875 or whatnot. And he said, well, the actual trade only costs a few dollars. We have to have $6,900 in our margin account to control what amounted to $188,000 worth of gold. And so you're talking 27 times leverage that these institutions are able to create this perception of reality that is 27 times manipulated, or every dollar equates to $27 leverage. And so these banks have had free run on suppressing price and being able to do what they want. The caveat to all of this is what we are seeing happen with the drawdown on SLV and COMEX and the LBMA, where it's easy to suppress price when no one is taking away all of the inventory. But you try to suppress price and all of a sudden get requests or demand for delivery, it changes the whole backdrop. And I just have this feeling that we're getting much, much, much closer to that end game moment where these banks really don't have the desire to play in that risky of a situation where you're seeing huge requests for delivery and not enough silver to back up even remotely the amount of contracts that have been issued. And I think we're getting really close to that moment. Maybe it's the fact that we're seeing not as concentrated of a position amongst these big banks, and doing things like pulling it out of SLV instead of messing with COMEX contracts, which obviously is a very dangerous game right now in a world that is accumulating hard assets.
I think you're 100% right. And also I always go back to what are the big guys doing. Ted Butler's been writing stuff lately about the managed money. They aren't really going as long as they used to go. And he's only seen this twice in history, once in 1979 and another time in 2011, right before the big jumps, because basically he said all these managed money people go to their experts. Their experts are their brokers, their JP Morgans, their Citibanks, and they're telling them, oh, take your profit. You've got a good profit, take it now. And so it really you might think, oh, that sucks, but actually it doesn't, because that's the managed money longs are the fuel for the slams,
Right.
because they play the crazy, moving average game. And
yeah, whenever you see record long positions by the managed money, in fact, Ted Butler always says, I was very disappointed to see the massive increase in managed money long. Most people think, well, why isn't that bullish? These are the big hedge funds. Yeah, but they get whipsawed every single time, rinse, wash, and repeat by the commercials who have deeper pockets and the ability to continue to suppress a rising market. Mm-hmm. That's the danger of what they do. They short a rising market, and you better have one hell of a deep reservoir of money and nerves of steel to suppress a rising market rather than a falling market. So, yeah, one of these days maybe we'll be right.
Unless it's they're in on the game. If all the the Citibanks of the world and JP Morgans are telling their clients, all right, it's rising, we're going to want to stand put, and at some point we're all going to go short, and they're all saying the same things and to their clients, that's what's going to drive the market. That's how the game is played. And like Ted said, it's only a couple times in history that he's seen what's kind of developing right now. And that was in 79 when, silver rose to $50 for the first time. And then 2011, when silver rose to $50 again. The reality of silver trading at less than 50% of its all-time high is probably the most ridiculous thing I've ever heard of.
Especially in an environment where all asset classes have been blown unrealistically high. It's even more egregious. But I also find it more bullish if you look at things from a contrarian point of view. Price is smashed. Rhetoric is horrible. Everyone thinks you shouldn't be buying it, yet the drawdowns. Look, to pull silver off of the LBMA or the COMEX, you have to be very sophisticated. It is not an easy thing to do. It's not like calling Miles Franklin to buy 1,000-ounce silver bar. Pulling off a contract is very in-depth. It's not easy to do. You're talking sophistication, wealth, and closest to the information. And when all of this silver gets pulled off, one of the things that I want people to understand is that, we've done a couple very large orders lately in 2022, both of them very, very large, and both of them had a good amount of 1,000-ounce silver bars in them, and they were left on at Brinks JFK. And one of the clients who bought over 1 million ounces of silver in 1,000-ounce bars wanted it stored in our Brinks Salt Lake City program. And I told the person that I buy the bars from, who has them all in Brinks JFK, they're a part of the Royal Canadian Mint, and I said, I want these bars. Here's the price that you're quoting me on these 1,000-ounce Royal Canadian Mint bars here. What about having Brinks deliver them to Salt Lake City for me? He says, Andy, you don't want to do that. And I said, well, why is that? He says, because it leaves the COMEX chain of custody. I said, but it's going from a Brinks facility by Brinks truck to another Brinks facility. It never left Brinks custody. He says, true that, but it left the COMEX chain of custody. And if Elon Musk offers $50 ounce premium for every 1,000-ounce bar that people want to sell, that person would not be able to take advantage of that, because they would need to be reintroduced into the chain of custody, which would be costly and take too much time. And so the point I'm getting at is that when this stuff leaves COMEX, it's a one-way ticket. It's never coming back. There is no reason to leave the eligible category unless you want out altogether, and it's going somewhere else. And when you see these record outflows and then see that India imported 300 million, questions, where did it come from? Yeah, a lot of it came from the Swiss refineries, but a lot of it came from the COMEX. A lot of it came from the LBMA, and probably some came out of share redemption out of SLV. The point of it is that it's getting harder to do that. But when it leaves, it loses all industrial liquidity. So it is never coming back. So when you see these delivery numbers, you should put an exclamation point after it. It's not just someone taking possession of metal. It's someone taking possession of metal in a form that the reason to keep it in this form is for the industrial liquidity. And you have just saying, I don't want that. I'm sending it somewhere else. And I think it really adds to the story when you look at it that way.
That's very well put. And I agree 1,000%. And I've heard nightmare stories and very costly stories of people trying to pull bars out of COMEX delivery facilities. Well, I'm not going to go down that path. Having a monopoly on this stuff by JP Morgan, still controlling all their clients' accounts. If you look at who's doing all the deliveries in silver, it's JP Morgan clients. Who's taking all the silver in? JP Morgan clients. JP Morgan still has their monopoly on silver, even though they were taken out of their physical position, theoretically, by the DOJ. And they don't. I mean, if you look at JP Morgan, since the lawsuit, they haven't barely done anything on their house account. They've basically been locked out of their own house account. So there's so much more to this agreement than what meets the eye, because it doesn't say in the agreement that they're not allowed to trade anymore. It should have, but it doesn't say that. And yet they have stopped trading. So for their house account, but that it actually absolutely exploded their customer section of their trading. So they have a house and they have customer. Customer did all the work now. So it's a shell game. We're used to it. We're tired of it. Let's talk about how are Silver Eagle's premiums looking? How are premiums with other coins? What do you got in inventory? And what can people do today before all this shit falls apart, do today to get their hands on some metal?
So I'll tell you, it's maybe the most interesting environment I've ever seen in 33 years. And I'm going to try and set the stage before I explain what happened. Look, we've all been bottled up for a better part of 3 years until recently, and caged up, drinking chaga coffee. And I personally, this last Thanksgiving, I mean, I couldn't wait. I was counting the days so I could just put down my laptop and have some cocktails and be with my family. We had 14 people staying in our house, and for 2 years, my wife's family wouldn't come here because of the virus. And so I think there was a moment this holiday season where people just needed to unwind and unplug and get out and be with family without having restrictions, without wearing a mask, without having to be, fearful of making it home in one piece. And so it's almost like someone shut off a light switch. And I'm talking to the big distributors and my friends and my competitors who I'm friends with outside of work said the same thing. It's like the damnedest thing. It's like demand just went from up here to bang, it collapsed. Just where to go? And this happened almost to the day, with about a week before Thanksgiving, and was consistent for the whole month of December. I truly believe that people just wanted out of, just get out of everyday craziness and go be with friends and family and let go. That coincided with the 2023 allocations of all the major mints being released. And in all of my career, I have never seen premiums cascade downward the way they have, ever. And I was caught off guard by this. I don't think it's anything structural or really meaningful in the scheme of things. I don't see it changing when you realize that less than 1% of the public has any gold and silver to their name. What this is a function of coincidence and of timing, where people unplugged for a month and all the allocations came in and demand dropped. The premiums on everything have come down considerably, except for Silver Eagles, which are still roughly $9.50 over the price of silver. And whatever their reason for being ridiculously underwhelming in what they're sending out and inefficient or whatever it is, it's startling continually startling because everything has come down to just above where it was in 2019. And in terms of availability, for the last 3 years, keeping product in stock has been next to impossible. It was 8 to 12 weeks that we had to purchase the stuff up front at record premiums and buy it 12 weeks from a mint across the Atlantic and run logistics until we received it. And now all of a sudden, with the 2023 allocations and the slowdown, I mean, it's like everyone is flush with supply for the first time in 3 years, and the premiums are not ridiculous, with the exception of Silver Eagles. Even junk silver premiums have come way down. And this has caught me by surprise. Now, if I had to guess, I would say it is not structural. It is not going to last, because at some point, as we see markets start to rattle with rates that keep edging higher, at some point as the economy slows down and this illusion of asset prices that have been blown sky high due to easy money and suppressed interest rates, when there is an equilibrium between asset prices and rising interest rates, when that moment happens, if I find it inconceivable that people won't wake up and say, my God, look at silver. It's still so cheap compared to everything else. And it's so needed. And oh my God. And they start listening to you and hear all the structural reasons why to do it. Like that, I think it dries up again and premiums shoot right back up. The moral of the story is this: in the 33 years I've done this, honest to God, I have never seen premiums go from up here to down here like that. And it's been tough on companies like myself. All of the retailers, we've been buying stuff from the mints and the main distributors weeks in advance. I was buying stuff in December that just came in that I'm selling for $2 less than I paid for it, because the premiums are way up here and now the premiums are way down here. Is it going to last? Don't know. But I will say with 100% sincerity, there has never been a better time since really February or March of 2020, in the last 36 months, to buy silver that is available for immediate delivery at a reasonable premium, with the exception of Silver Eagles, which are still stupid.
Well, I mean, from a buyer standpoint, from a retail standpoint, we're paying pretty much similar, because with the drop in the premiums, we had a rise in price. So it's kind of like you're going to pay, I don't know, $29, $30 an ounce for silver, depending on what you're buying. Although, mentally you think, oh my God, the price is at $18 and falling. It's a fear factor and the supply is dwindling. I'm going to pay $28, $30. And now it's like, okay, the price has gone up $6, $7, $6. And it's like, okay, I'm still paying the same from the retail side, because the premiums come down and the price went up. This is all, to me, a function of a dysfunctional market. This is the symptoms of complete rigging and even, suppliers trying to gouge everybody for as much as, even the mint. Now, the mint is not supposed to make any profit on the bullion products that they sell. It's in the law that they can't add a premium, and yet they keep saying, oh, we made $4 million, or they made over $1 billion, and they gave a bunch back to the treasury. They're not allowed to make profit on Silver Eagles or Gold Eagles. It's written in the law what they can charge, and nowhere in that law does it say you can mark it up whatever you want. Now, I know the authorized dealers, the guys who get it direct from the mint, are probably the ones, and we talked about this before, because they weren't moving, so they got their fixed costs as well, and they're going to sell it for what they can sell it for. This is a free market. I agree with that, but at the same time, when Ventress Gibson can't make 16 million Silver Eagles in an entire year, when she said she increased capacity of Silver Eagles, something fishy is going on over at the mint. I don't like it. I'm going to continue to scream about it. Their derivative book is off the hook. Most people don't know that the mint has a derivative book. In the 2021 year, derivatives are supposed to offset the movement in the price of silver, so that they're not subject to the volatility of silver. And that's even what it says in the annual report, why they have derivatives. That's fine. But when the price of silver goes down or goes up, and you lose the price of silver goes down and you lose massive amounts on your derivative book, which is what happened in the 2021 annual report. They lost $112 million on their derivative book, plus they lost $40 million on the declining price of silver. That's fraud. That is pure and simple, either mismanagement of the derivative book to an insane level, or something else is going on at the mint.
Well, one of the things that I've always been drawn to you about, even before we were friends, was the way that you research things differently than everyone else out there. You have a very keen way of doing things and seeing things that others don't. You are the only person in this entire industry who caught the comment by the head of Sunshine, who more or less admitted that they provide the 1,000-ounce bars, they being the mint, that they take them off of COMEX. Everyone out there said the reason that the premiums were high was there was a shortage of blanks, which isn't true. If they're providing the 1,000-ounce bars, there should not be a shortage of blanks. It's just putting it, chopping it up into shot and then running it through a machine to get the blanks. And if you are a US based corporation, that being Sunshine, and you're providing on a contractual basis rounds to the mint, and they're providing the silver, that could not be further from the truth. You're the only one who caught that. And, so what is the reason that they only made 15 million Silver Eagles when they made 3 or 4 times that in 2017 and 18? What is the reason? And that is what you are onto that nobody else has caught on to. Everyone believes that they're buying the blanks from Sunshine, and that Sunshine just was getting paid more from the Rand Mint and from other mints so that they could make the blanks. It was a capitalistic type of thing. But that's not true. So the question is there something more nefarious at hand? Are they stockpiling silver? Are they doing it for the next system? Who knows? I think you probably know more than most of us, but I will give you kudos for that. Still to this day, I hear commentators saying there's a shortage of blanks. That's why they only made 15 million. And no, that's not true. It's something other than that, because they're providing the 1,000-ounce bars. There shouldn't be a shortage.
That and the argument that other people will pay more, legally, the U.S. Mint is supposed to pay the most out of anybody. They're supposed to pay fair market value for the blanks, no matter what it is. They're the only entity on the planet that is legally obligated to buy silver blanks at any price, because they are legally obligated to supply Silver Eagles in quantities to meet demand. So when people say, well, no, other mints are paying more, that would be the fair market value of the processing by the Sunshine Mint. The U.S. Mint, by law, is required to pay whatever it takes. If fair market value jumps up because other people are bidding higher, that's fair market value. We live in a free market society. The mint should be buying, but out of all the buyers in the entire world, there's only one entity that is required by law to continue buying no matter what the premium on the blanks is. And that's the U.S. Mint. So
this is what I mean, that you do things differently than everyone else. And I don't have to say this to reinforce to your new subscribers who are new to you just how great you are. But you're the only other person who realized that why would the United States Mint, maybe the most important mint in the world, hire the head of HR to be the head of the mint? I mean, is that about the dumbest thing in the world? Who told us that? You did. Vitris Gibson used to be the head of human resources at the mint. I don't know about you, but the head of human resources is qualified to be the head of the mint. Why? I don't know. I mean, and that's why, there's a fine line between conspiracy and reality. Are they stockpiling it? Is there a shortage of blanks? Do they not even, is that totally false? Do they pay? All of these things, there is a fine line, and I give you credit because I have yet to hear anyone say any of these things that you seem to have an angle on. And I don't know how you find your information or how much, if you ever sleep, but it's impressive, the things that you've come up with, Bix, because I haven't heard it anywhere else.
Well, ultimately, to me, 20 years doing it, but it stems from knowing that there's a difference between what the U.S. Mint makes and calls money and what the Federal Reserve makes and calls money. The Federal Reserve is a promissory note. The U.S. Mint makes the real money of the United States. So if we sit there with our currency and our paper bills and our coins, and we think these bills are, I got a $100 bill here. Why would I want $100 worth of pennies? Well, one, it's got other elements in there, not copper anymore. But number two, and more important, it's made by a different entity for a different purpose.
By the Treasury instead of the Federal Reserve.
Right. So hey, we can go round and round.
Oh, I just figure you deserve, we all get a lot of shit for saying things and being early, but I just think you deserve a little props for looking at the world at an angle that others don't, and I've always respected you for that, and you've been dead on.
Well, thank you. I mean, I credit the Federal Reserve Bank of Boston for publishing the Road to Ruta documents beginning with.
Well, there you
Made me
go.
start thinking about the world differently. Andy, let's say people want to get silver right now. They want to get it in their hands as soon as possible. What do they need to do?
All right, so I do want to make a caveat. It's been the most embarrassing venture of my life. I've actually fired people recently because of it, and people who I like. I was told that our new website would be soft launched on August 22nd of last year. It's done. There are two pieces of integration, that being the tax software and the credit card software, that were supposed to have been done by the person who is no longer with us, who none of it has been done. I would like to hope we're a week away, maybe 10 days. I'm hoping. I'm not going to say that because I'll kill my computer programmer if he walked in my door right now. I'd grab a baseball bat. So let's just simply say that it's coming very, very soon. In the meantime, please send us an email at info@milesfranklin.com. Ask for, say, Bix sent me. That's really important. And say you want an updated price list. We have amazing availability right now. The best prices I've seen in 3 years. We'll answer any questions that you have. If you want to be contacted, put it on there. Put your phone number down.
I think that's the best part. Besides, I get how people want it easy, want to click a mouse. Getting a contact at Miles Franklin will do you much better than clicking a mouse. Let me tell you.
Yeah, relationships matter, and we're good at that. And our brokers have decades worth of experience, and almost every one of them literally goes back to childhood with me. 14 of them go back to childhood, elementary school, little league, high school. We're all family, and we treat our clients that way. And make sure you say Bix sent me, and I will make sure that your listeners get treated the way you would expect, both with information, price, and tact. So for what it's worth, I appreciate it very much.
Great. Thank you so much, Andy. And make sure you guys get your silver as soon as possible. The sooner the better, in my take. The system could fall apart at any moment. We know that, but we've known it for a long time. Andy Schectman, Miles Franklin, thank you so much for spending time with us. And
love you, Bix. You stay well, brother. I'm always a phone call away. If you ever need me to jump on, I'm always eager to do it.
We're going to do this more often as things heat up. So thank you, Andy. I'll talk to you later.
And one last thing, tell Josh to get in touch with me so I can get you those Road to Ruta bars. Got to figure out what's going on. We'll get those done right away for you.
Ooh, are you secretly saying that? Yes, we are working on Road to Ruta 10-ounce bars. They're going to be great. So I'll let you guys know about that. Andy, thank you so much.
Stay well, buddy.
All right.